quick market update. We're in a pretty interesting location in the markets here. So we've got the S&P 500 futures market up right here. So what we're kind of looking at right now is you've got a nice rounded bottom here, rounded bottom, and this is the formation of a cup and then the handle. So this is the daily chart of the S&P 500 futures, and we got a nice retracement here. So now what we're looking for is that next move up. So early entry would be coming into the area of demand for those investors that understand supply and demand. You can get into the transaction here. So we're going to break this down to a smaller time frame in just a minute. But you can also look at this from the daily standpoint of the daily chart and look at kind of traditional methods. And the traditional method would be entering the trade above the previous day's high. And there'd be absolutely nothing wrong with doing that. Above the previous day high, you're going to run into this resistance of the 60-minute trend line here, as well as this longer-term support resistance area. So support resistance is also looking at traditional education. So your prior resistance, and looking for this to become support. And we also got an area here on the 60-minute time frame just above us here. So that's your daily time frame. Let's break it down. Let's look at the 60-minute, and we'll take a look here. On the 60, you can see we've had a nice uptrend. We've got the retracement, and the question is now is what next? What do we do now? So looking at this, there's a great little area of demand right here, and this is the transaction we posted in the trading room yesterday. It's coming up into the supply level, and look for that short right down there, and that was absolutely beautiful. That worked out perfectly. But now you've got the 50-period moving average coming through here. You get the 20 and 13 coming in here, and these really don't mean much because we've been going sideways. But ideally, what we'd be looking for is a drop lower in the market, and I would expect to come lower than this demand level and come down to this area here with the support resistance with this little demand right in here. So that'd be a great location if the market is to break down, is to get lower down in the markets here and then get your first entry on, and then breaking above the trend line and through support resistance and yesterday's high, adding to that transaction and then looking for the next leg up. So this afternoon we've got Tesla coming up with earnings. That's going to have a kind of an impact on the markets. Next week you got Apple, Amazon, and Google, some big names coming out. So those big tech companies are going to have a lot of influence on the direction of the market. So there's the S&P 500. Let's jump over and we'll take a look at the Russell 2000. This is a 60-minute time frame. The Russell 2000. We were in a symmetrical triangle here, rising. We broke that lower trend line right in there. So breaking that lower trend line, we're now in the bearish formation. So what we're looking at here is coming back up into this area of supply. So this is on a 15-minute time frame here, that area of supply. I don't usually go down to this smaller time frame, but right here you've got a supply level on top of supply level, right? As well as you've got the lower trend line coming through and the 50-period moving average. So there's a lot of area, a lot of selling, a lot of resistance here. So this is also known as a bull trap, breaking above yesterday's high, coming up into the area of institution selling. So up in here, this is going to be a great little day trade to look for that short transaction. So ideally what we're looking at is that 1620 area. 1620 area would be your entry point, and 1622 would be your stop. So not a great deal of risk, but there's a lot of upside, a lot of downside potential on this one, where we can trade to a minimum at least down to 1606 there. So there is supply here. There is supply here, and this supply may hold, and we may not get up there, but this would be the area that we'll be looking for here. 1620 would be your entry, stop loss above 1622, and then look for that short-term short play to then pick up the longer-term long play, right? If that makes sense. So I know there's a lot of long and short there. On the NASDAQ, the big influencer, the NAS, we can see we're obviously in a downtrend, still in the downtrend in the 6-minute time frame. Ideally, I want the NASDAQ down into this 11,500. So 11,495 would be absolutely beautiful to get long this market. You'd be down here at the lower trend line, right into a solid area of demand right here, which is also a large support resistance area here. Okay, so if we can get that drop, so you can see we've got this trend line here. We've broken that trend line. There is also, let's zoom in here a little bit, this area of supply right here. Area of supply at 11,704, stopping above this high here of 11,742. So up into the 50-period moving average, lower trend line, upper trend line, so massive amount of resistance here in supply here, and look for that short again as a day trade to then get the longer term swing trade. So a lot of things going on right there. Let's jump over and we'll take a look at the VIX. Right, on the 6-minute chart of the VIX, this was coinciding with the S&P futures trade there yesterday, as well as the NASDAQ trade. VIX came down into this level of demand here. Now, if the VIX breaks through this area here, okay, you're going to have the spike up into 3130. 3130 with the market breaking down into those areas of demand that I just explained would be a phenomenal area to get long the market for a swing trade, right, for the next 2 to 10 days. And we should have a pretty good move to the upside if the market can if the market can reverse there. So right now, breaking above this 30 area is going to confirm those short transactions that we just talked about for the day trade. And coming into this area here of 3140, 3130 would be an excellent area if we're in demand in the S&P and the NASDAQ and the Russell 2000 to get long the market as the market's going down. So we want to buy as cheap as possible, get a stop loss as close to our entry as possible. That reduces our risk and gives us the greatest reward potential. Right? So that's a skill set you need to learn. Gold is on the move here. So the big news to kind of lingering around the markets right now is the stimulus. Right? So you can see here a symmetrical triangle. We had the breakout here on the daily time frame. We had the breakout of the symmetrical triangle. We're hitting the resistance right now of that 50-period moving average, 50-day moving average. We break this down. What can we do with it? What do we have here in the 60-minute time frame? Right, we're way up into this area of selling into supply here. Look for the retracement back down into this area of demand, coming through with the support resistance area, the dotted line, as well as a 13 and 20 period moving average. This would be a great area to get long gold. 1920, very small risk here, stop loss at 1917. And then you've got massive upside potential in gold. Massive upside potential. This could be the start of the next big leg up in the markets, in the gold market. What's going to influence that movement is definitely going to be the US dollar. Let's look at a couple different stocks here. Apple is primed. This is the daily chart. We had the breakout of the triangle formation here. Nice move up to the upside. Nice retracement back into the 20 period and 50 period moving average right here. We have a bullish harami. We get above the high of this candle right here in the daily time frame. That is your permission to get long this market. First target sitting up here at 130.14. Right, so looking for a 2 to 10 day move to the upside. Apple does have earnings next week, so we may get that run up into earnings, and that is a very common strategy to trade on these big, strong companies. So obviously, the shutdown of COVID and everything else has been helping these type of companies. Let's look at another big tech name here, Amazon. Amazon on the daily time frame here. Right, we have a level of demand coming in just below us. We hit this 2 days ago here. We obviously, you can see there's massive buying pressure under this by that long tail there. So a retracement back down to this would be phenomenal. We've got the 50 and 20 period moving average right here. We closed just above the 20, just below the 50 there yesterday. Again, a bullish harami formation. I think this should be green for bullish harami, but little tiny spinning top candle right inside a larger candle here. So inside day there yesterday, but breaking above the high of this day here, that's your permission to go long. If we get the drop down in here, now you can get long the market trading in the upward direction with your entry much closer to your stop loss with a much higher reward potential on the upside. And you're buying with institutional unfilled orders here, institutional investors here. So preference would be to go lower to get the purchase than to go higher to get the purchase. So really looking for the markets to break down to those lower levels in the NASDAQ, the S&P, and the Russell. Right? Get the major markets in their demand levels, get these big stocks in their demand levels, and you've got a recipe for profits. What else can we look at? Let's say you take a look at kind of TSCO here. So this is one of our big running stocks, TSCO. So beautiful move to the upside. So you can see I set up here, target 1, target 2 is being hit. We've taken that to a new high here. So we've got room to run. There's nothing above us here. So nice retracement back down to the 13 period moving average into a little area of demand. Now preference would be to come down into this area here, the 146 mark, and then look for the move to the upward direction. That would be the preference. This company just may be too strong for that to take place. So coming to the 13 period moving average, look for a formation, candle formation here to get long this stock. And this is a runner. PFSI is another one of our stocks that are a runner. You can see this just strong, massive move here. We finally got a beautiful retracement on this. And we're coming down with looking to fill the gap here into that 20 period moving average. So you reversal here, reversal here, reversal here on that 20 period. So institutions are using this to accumulate. So a little lower on this one and into that 61.14 area. And this is where we're going to be looking for an entry point. The demand level is right here. Right? So that would be your demand level. And this is as long as we stay above 58.32. Right? This stock is bullish, still strong, and a great candidate to accumulate as a longer term play, and just let this one run. Right? Let this one run. Another one we can look at here. Let's see, maybe TER. Okay, you can see the beautiful play we picked up on TER. This is from an email I sent out of stock picks. Beautiful entry point, got the low of the market when 3 targets hit and have gone higher. Now we got a high base. So we've got traded high. We're basing. Break above 88.80. And you've got a breakout trade on your hands. This can really move and this can really run. So big play right there. Dale Sogger Trader Boys, quick update for you before the market opens. Get you ready for a couple day trades there and some swing trade potentials long on the markets, running up into some big tech stock earnings next week. So looking at that common play of accumulation of tech or accumulation of strong companies before earnings. Have a great day. May your charts be green today.